All right, we begin here in Nigeria. Central Bank, that's the Monetary Policy Committee, raising the benchmark interest rate by 50 basis points to 27.25%, fifth hike since February of this year. Central Bank Governor Olayemi Cardoso disclosed this during a press briefing at the end of the 297th Monetary Policy Committee meeting in Abuja. The development comes as the nation's inflation rate eased for a second consecutive month in August to 32.15%, according to the Bureau of Statistics. Let's hear from the governor.
Decisions of the MPC. The committee was unanimous in its decision to further tighten policy and thus decided as follows. 1. Raise the MPR by 50 basis points to 27.25% from 26.75%. 2. Retain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3. Raise the cash reserve ratio of deposit money banks by 500 basis points to 50% from 45%, and merchant banks by 200 basis points to 16% from 14%. 4. Retain the liquidity ratio at 30%.
All right, let's get into the implications of this with Ayokunle Ojo, who's the founding partner at Coinfocal Solutions. Ayokunle, good afternoon. I'm saying good morning. Good afternoon for you. Thank you so much for joining us. Good to see you. I guess to kick things off, I was surprised by this. What was this in your forecast? What did you make of the decision?
Yeah, I think I expected, that they would hold, but with some sense that this might happen. But yes, if you had asked me, I probably would have said, no, they should hold.
Exactly.
But this is not totally surprising. Yeah.
Now, okay, so that's the metric. That's what we're seeing there. So 50 basis points, 27.25. Asymmetric corridor was unchanged. They raised the CRR for deposit money banks, 500 basis points, also for merchant banks, liquidity. The governor kept talking about inflation. And while we've seen it, I guess, decelerate over the last couple months, how have you reacted to the trajectory of inflation? How do you see things closing out as we go into the end of this year?
Yeah, I think generally over the next few months, inflation will continue to decelerate. Earlier today, I looked at the numbers, and it does seem, even though inflation will continue to trend down, it's going to be a slow journey, all the way down. There are two things to bear in mind, given rise in petrol prices. That's, it's not impossible that even though generally we're on this downward trend, we would see it's very possible to see a slight uptick. But even if that happens, I don't think the direction is going to change. It's heading downward. The other thing to bear in mind when it comes to inflation is the fact that the MBS did say that they'll be rebasing. They will, and rebasing is going to change how we interpret the numbers. So again, what's going to happen in November, that might shift things around a bit when it comes to the numbers.
Thank you for raising that point. Yeah. There will be a rebasing of GDP, also CPI basket, and also we'll get another monetary policy meeting in November, I think 24th to 25th or so. Yeah. Okay, so because some folks were thinking there would be a rate cut, I don't know why, but for those who wanted to see a rate cut today and didn't get it, if inflation continues to trend downwards, when do you think that might happen? I mean, are we looking into sometime in 2025, for instance, or are we just taking rate cuts completely off the table at this point?
Definitely 2025, because if you think about it, they've got one more meeting this year. We can't. I don't think it's reasonable to expect a rate cut in November. I would think they're probably going to start the new year, and say, we want to see what's going on, because again, like I said, even in the optimistic scenario that inflation continues to trend down, we're probably going to close the year, above 30. Listening to the governor earlier, it doesn't seem like he's ready to give in yet. He did make a statement to say, I'm going to do everything to fight inflation. So just hearing that, sort of gives me this sense that a rate cut is not happening.
He also made the point. He was saying that you can't fight poverty when inflation is this high. With all the talk about poverty reduction and everything, you just can't. You can't do anything like that when you've got inflation that's in where it is right now. So with the hawkish stance that we still have from the MPC now, if you're head of an advisory group, you talk to businesses and individuals all the time. As far as the impact on them, with where rates are now, how do you see them faring?
Yeah, it's high rates are in terms of if we start with the individual, it just means that if you're borrowing, the interest rates are going to be they're already high, and they're likely to go higher with a decision like this. And that, for small businesses, for large businesses, that sort of feeds through to the cost of goods. So how do you react as an individual, as a business? I think from an individual perspective, it's really saying, especially for people with savings, to say, how do I ensure that my investment and my savings are growing, maybe matching inflation or doing better than inflation. So I don't think it takes away the problem that all of this is creating, but it does help to cushion the effect. And from a business perspective, it's really time to say, okay, my costs are going up, what else can I do to put my business in a better position going forward.
Speaking of what else can I do, if Nigeria is asking that question as far as inflation is concerned, can all this be solved just with monetary policy? And if not, what do you want to see the fiscal side? Because I do want to point something out. He did, the Governor Cardoso did mention FAC allocations. I was like, wow, he talks about the impact on the exchange rates and the impact of money supply, which is for our viewers, the Federal Accounts Allocation Committee, that money that's paid to the 3 tiers of government. So what do you make of what if monetary policy isn't enough, what the fiscal side can do?
No, I think the government, the fiscal side, will have to continue to be responsible. Both, again, you can't. They have to spend, but that spending needs to go to the appropriate sectors. It needs to go to value-adding, infrastructure, and again, even in the world of infrastructure, they do have different impacts and different timing. They have to continue to pursue things that reduce the pressure on the masses, and they have done a few things, but they need to do more.
Thanks. We just had a chart. I want us to put that back up, and I want to ask you about the exchange rate because of the pass-through effect of exchange rates on CPI. So I think the higher yellow line here, that's CPI, and then the blue one is the NPR. So there's still a bit of a gap. So the exchange rate, how have you observed its movement? Are we in a moment of stability, or is the Naira still finding its level? I think we're back at 1,500. We touched 1,006 about a week or two ago. But so how are you seeing things on the exchange rate side?
Well, we can start with the governor's comments, and again it was quite clear that part of even though the primary reason for raising rates is to combat inflation, but he did mention that it's important to position the country to be attractive to investors, and again if you put it in context, Nigeria has raised rate by 50 basis points. The U.S. has reduced their rate by 50 basis points. So effectively, there's a 100 basis point increase. When you think about inward capital, and the central bank is clearly targeting that because they're focused on the exchange rate. So I think from the central bank's perspective, they seem focused on keeping the currency stable. I think that's, barring unforeseen shocks, shocks, either globally or locally, I think they're in a place, where they at least for the next few months, we should expect, the currency to be stable. It's something you have to keep looking at.
Yeah.
You can't say, it's going to be stable, then go to
then look
sleep.
away.
You have to keep an eye on it.
Yeah.
But from what we're seeing, yes, we can't see too far, but as far as we can see, we can expect.
Okay, so my follow-up then, again, I'm sorry, I'm back to businesses and individuals now. Yeah. As far as trying to preserve purchasing power, do you have to look at for FX securities and savings or outside Nigeria? What's your advice, or rather, as far as maintaining purchasing power for those in Nigeria?
Yeah. So for businesses, I think what an environment like this, where exchange rate is not quite predictable. In fact, interest rate is also not quite predictable. Mm-hmm. So for businesses, it brings to bear, the need to plan, the need to sort of you have to do a bit of more financial planning now.
Yeah.
Considering that you have to lock in. If you need to lock in, you lock in.
Yeah.
But it's not. Sometimes you need to wait. But it's really saying, this is what I'm selling. This is the business I'm in. And this is what my output looks like, and these are all the factors that are feeding into my cost.
Yeah.
And again, if we've seen people looking at their pricing as well. All of this will need to be done. I think for individuals, it's really important to have a diversified portfolio.
Yeah.
That's the way to reduce the impact of shocks. And by diversified portfolio, it then means that you want to invest across asset classes. In terms of you're buying fixed income securities, you're buying equities. And you're investing across geography as well. If you can. So diversification is both geography, asset classes, across industries. You just want to protect yourself because you don't know what's going to go wrong, because something will go wrong.
Yeah. Okay, so one asset class I want to talk about, maybe I should talk about a sector rather, is the banking sector.
Yeah.
The impact of these higher rates, of this hawkish stance on the banking sector, have you observed how that has passed through to them?
Well, so if we look back, so the central bank has been on this mode, for a couple of months, and beyond the pushing up the headline rates. They are also, making a lot of regulatory changes. Some effectively, even though they're public information, but they're more internal to the banking system because the public are not necessarily processing that information. But generally, the last 1 year has been, I believe, has been positive for the banking industry, and at least from understanding the regulator, and the governor also did mention this to say, I want to build trust. I want people to trust, what we're doing at the central bank, and that's good for the banking industry because you can from a business perspective, the banks know what to expect. The high interest rate environment is positive for the banks as well because their interest earnings are up. Obviously, the decision today to raise cash reserve, that's negative,
right.
For the banks because it then means that 500 basis points, 5% of the deposits in the banking industry will move from earning to not earning.
Right.
So that's negative for the banks. The MPR raise is positive for the banks. So again, all in all, I think the banks are positioned, appropriately.
All right. Now, speaking of which, some banks have done, pretty well. I mean, if we just look at Tier 1, I think 4 of them or so have released their half-year results. And so GTCO, like ₦1 trillion first half of this year, 205% climb. Zenith, 727 billion. First Bank, 411. Access, 348. Now, as far as the banks are concerned, you wrote a piece on GTCO in particular. You're pretty bullish on their stock. Can you talk to us about share your thoughts about why that is?
Yeah. So again, I think the first thing is to say that I'm quite positive about the banking industry,
right.
Generally,
yeah.
and these numbers, that the half-year numbers, is showing that. If we move away from the half-year numbers, we know that as banks, build up towards the deadline to raise capital, the banks are raising more capital.
Yeah.
It then means that their capacity to do business is increasing.
Yeah.
And with that, if you mix that, with the fact that the interest rate levels are high, it then means that most banks, are just going to do a whole lot better. And I think the other thing that is not super obvious to other people, it's that the banks are coming from a really tough regulatory regime.
Yeah.
And
like the windfall tax,
yeah,
for instance.
Again, windfall tax is negative for banks, but if you think about cash reserve ratio, it used to be like even though it was at 27%, the implementation, was really negative for banks. I think things are a lot clearer for them. But specifically for GTCO, I think again the numbers show it. They have in the same environment with probably smaller balance sheets, than some of the other banks. They've been able to, they've shown a whole lot, in results. And I think again, just looking forward, and this is my opinion.
Yeah.
I think we will see impressive results, from them, looking forward, because if you look at their cost of funds, it's super low. It's about 1.5%, and some of their peers, have double, triple of that. So my sense is that they would sustain their already high, net interest margin, which is effectively, if you want to explain it in a very simple way, it's really the difference between what they're paying, in interest, and what they're earning in interest.
Right.
Based on their half year, that's about 10.4%.
Wow.
And again, it's high, but if you just doing the analysis and just looking at the industry, they would either sustain that, or maybe even improve it, and of course not forever, but at least for the next couple of months. They also, run a fairly efficient business, and that's, again, you can pick that up, when you look at their cost to income ratio.
Yeah.
So yes, I think the banks are going to do well, but specifically, I'm extremely positive about Guarantee Trust.
Thank you for the breakdown. Okay, looking at other sectors, because there's so much going on. Our colleague, Leila Johnson-Salami, she has a report on medical inflation, and she was looking at the high cost of medication for Nigerians. So that's looking at, I guess, pharmaceuticals and so on. Then there's, Dangote making headlines with his refinery. That's oil and gas. There's all these other industries, consumer goods and so on. How outside of banking, where's your eye as far as the other sectors in Nigeria?
Yeah, well, I think it's an ongoing work, and we have to keep looking. but a few things to think about. It's that for businesses that are somewhat dollarized, either because they're exporting, or because they're able to price their goods, benchmark even the local prices of their goods, to dollars. So for those kind of businesses,
like Seplat,
then it does make sense to suggest that they'll do well. Of course, the devil is in the details. You have to look at the details before you can make those conclusions. But I think the other thing to bear in mind is that if you think about this whole inflation, exchange rate, if we do move, and there's a big if on that, right? Yeah. If we do move to a stable currency and lower inflation, that's a big positive for the economy itself, and if the economy in terms of, and we're looking like way forward now, medium term, and not so much the next few months. We could potentially see a scenario where all of this, feeds into the GDP numbers, and we start to print better GDP numbers that we've seen than we've seen in the last few years.
Yeah,
You know,
yeah.
and that's positive for the country.
So, okay, based on that, and I know you put, big ifs, it's all, conditional depending on how things go. What would be your outlook for the economy? And I know it's a transition year. There've been reforms, things have been tough, exchange rates, fuel subsidy removal, price cost of living going up. But I guess looking ahead, what's your outlook? Are you cautiously optimistic? Or
Yes, I'm cautiously optimistic.
Yeah.
I think the central bank, in my view, particularly in the last 6 months, as distinct from the last 1 year or the last 18 months.
Yeah.
I think specifically in the last 6-7 months, I think the central bank has taken all of the right decisions, in my view, and it will, and it should, deliver, positive benefits, to the economy. It might be lagged, it might be delayed, but I do expect that. On the fiscal side, the story is a little bit different, but we're saying directionally, we're saying, we're seeing a government, that wants to do the right thing, but they just need to keep doing it, and yeah.
All right. Hey, Ayokunle Ojo, the founding partner at Coinfocal Solutions. Thank you so much for joining us. Really appreciate your time, sharing your wisdom with us on the outlook for Nigeria's economy. Thanks.